Hey, welcome to the Mortgage Minute for November 20th, and today we're going to be talking about interest rates. Before I do, it's raining outside, and in Vancouver, that's normal. We had a great sunny October, but we knew it couldn't last. Eventually, things had to get back to normal, right? So now the rain's here. That's normal. Mortgage rates, back to normal? Will they go back to normal, or is this the new normal? This was a great article in the Globe and Mail that we sent out last week talking about the fact that Benjamin Tall, a good friend of mine, was suggesting that maybe this historically low interest rate environment is a new normal. I mean, we all know that the Bank of Canada has been saying us that 3% prime rate is not normal and things got to get normal. Well, what does that mean, normalized? Well, what they're really referring to is they feel that normal rates would be a 5% prime. Now, this begs the question, should you take a fixed or variable rate mortgage? And of course, when you're looking at a fixed or variable rate mortgage, you don't have to just look at what rates are today. But if you take a 5-year term, you have to take into consideration where you might be renewing your mortgage into. For example, if rates are going to quote-unquote normalize, that would suggest that you may be renewing into a 5% interest rate environment, in which case, maybe you want to lock in for a long term instead of a short term. But if Benjamin Tall's correct in his assessment that maybe interest rates normal means 4 or 4.5, wow, that's really starting to make variable rates very attractive. So here's the bottom line. Whether a fixed rate or a variable rate is right for you really depends on your personal situation. I know some of you would love for me to say, take fixed, take variable, and have a carte blanche and with one brush stroke tell you everyone what to do, but the truth is we can't. It's a personal decision. It depends on your personal budget. Depends on whether you're focusing on reducing your expenses today or accelerating your debt reduction. Where you see your mortgage in 5 years. Do you have the capacity to have some risk tolerance, or should you lock in for the long term and pay a bit of an insurance premium to protect against long-term rates rising? Anyways, the bottom line is give us a call. If you've got these questions, wondering whether to lock in your mortgage today or whether to take a fixed or variable, if you're buying something today, then give us a call, talk to us. You can go to my website at peterkinch.com and we'll help you make the decision. Thanks. That's the Mortgage Minute for today. Have a great week. We'll talk to you soon.